Hey guys, just wanted to do a really quick video on a super hot topic is who's getting the best mortgage rate when shopping around on a purchase. So I just want to do something really quick, show you guys a quick scenario, and I'll do a part 2 explaining why, but first we'll just talk about who. So right now, if you're shopping around and you're seeing rates as low as 3.09 for 5 years, or you're seeing variable rates as low as 2.2 for 5 years, how do I get access to those rates? Because most people are calling in, and then once they give us some quick information, they may realize they're not eligible for those rates. So who are getting the best rates in the market? Number one is anybody paying CMHC or Genworth. So that means if you're putting less than 20% down, then you are eligible for the best interest rates in the market. The second part of that is if you're putting 35% down or more, then you are also getting best rates in the marketplace. So a lot of clients say, well, what's the rate if I'm not paying CMHC? So the rate usually jumps about 30 to 40 basis points, which means that somebody putting 20% down who's not paying CMHC is getting 3.39 for 5 years. So we're doing a quick chart to show you what the difference is, because a lot of people say, well, I'll just pay CMHC. That makes more sense. I'll put 19.9% down and pay the CMHC. So I'm here to tell you that that is not worth it. It is absolutely a better scenario to put the 20% down, pay the higher interest rate, because you're not going to get the savings or the value out of the lower interest rate. So $400,000 purchase, you're putting 20% down, which is $80,000. That means you're mortgaging $320,000. So you're getting the 3.39% mortgage rate. That mortgage payment is $1,579 per month. Now, the scenario where you want to put 19.9% down, you want to put $79,000 down. So in that case, the total mortgage is going to be $330,000, because CMHC is actually about $9,000. They're going to add it back onto your loan. So you're going from technically $320,000 to $330,000. And that gives you an interest rate of 3.09%. The mortgage payment on that is $1,576. So you're kind of thinking, well, see, my payment's lower for putting less down, but the balance at the end of the 5 years is where you're going to see a huge difference. The balance at the end of the 20% down is going to be $275,000 versus the balance at the end of paying CMHC is going to be about $282,000. So realistically speaking, you're not going to get the savings. So take the higher interest rate and pay off the mortgage sooner. So watch for the part 2. We're going to explain why all these differences with mortgage rates since the mortgage rule changes last year. Thanks. Bye.